On the phone now we have Toby Esser, who is the Group CEO for Cooper Gay, Swett and Crawford. And anybody who's been following the London market, and in fact the market as a whole, knows who Toby is and what Cooper Gay has been doing. Toby, good morning. Thank you for being with us.
Hi, Frank. Good morning. Pleasure.
Well, my pleasure. Thank you. We've been following with great interest some of the strides that Cooper Gay has been making over the years, and you're now, I think, officially number 4. Is that correct?
In reinsurance terms, absolutely. But I think these days, we like to brand ourselves more as pretty much the only global wholesaler. I think it's the only others who have global reaches are retail brokers, and we're not in the retail space, don't intend to be, but certainly the wholesale and reinsurance areas is the one that we want to see if we can grow dramatically in.
Let me ask you a question, and you probably would guess that I would ask you this. Back in January, there were some incredibly, and to my mind, incendiary comments by Peter Zaffino, the CEO of Guy Carpenter, right on the front page of the Insurance Day. And he allowed that outside of his company and Aon and Willis, there were some, quote, very good niche reinsurance brokers. He also said that I don't see how such smaller reinsurance brokers and a large reinsurance broker can get paid the same because we, the large brokers, are bringing so much more value to the table. And then he went on talking about the massive infrastructure that these big companies have and how their clients and markets presumably would avail themselves of this, specifically mentioning claims payment. And I read that, and we reported on it on air, and during that broadcast I specifically said, I will assume that Toby Esser will have something to say about that. And 2 days later, you did indeed. Can you talk a little bit about your reaction to those comments?
Yeah, absolutely. I think firstly, claims is the right place to start. We actually give no service to our clients whatsoever unless when there is a major claim, we perform and we perform well. The most recent example, I think, of that, of a sizable loss is the Chilean earthquake, and we had a very significant involvement in that marketplace. I met with the leading market of the Chilean insurance market yesterday, actually, and he told me, in his opinion, the service that we had given to them was the best service of the reinsurance brokers. Now, at the end of the day, our job is to get the money to them, is to get the money to them as fast as possible, and in a way that they can understand the process and understand the issues through the process. And that's a very personalized service. That is not a commodity. That's making sure that senior individuals are involved all the way through the line. I personally have been involved with that, and many of my other senior colleagues have been involved with that. So I fail to see how it could be justified that a bigger broker, just because of size, should be paid more, when in fact the service that's been given in that example is a better one. The other example I gave when I was asked this question was, if you compare a suit in Marks and Spencer's, who sell an awful lot of suits, to a suit that's bespoke made by a tailor, the bespoke tailored suit is more expensive because it's specifically tailored to meet the needs of the customer, as opposed to the Marks and Spencer's, which is much more of a commodity. Again, I would suggest that with a smaller broker, the service is much more personalized, and there are many clients who want to buy that. Not all clients, of course. The last point I'd probably make is that the reinsurance broking arena carries traditionally very good margins. There are not many reinsurance brokers who would be claiming to lose money or even to not make a reasonable margin. And certainly we run our business in a way that we make good margins. So I don't see the justification for charging even more to the clients. And we're certainly very willing to discuss with any client who thinks that they're being charged too much money by the major reinsurance brokers.
Has there been any follow-through from the major brokers? I remember reading something not very long ago about Aon looking for an additional 3.5% from London market business. Anything to what Zaffino was saying?
Well, there definitely are moves in the London market, along those lines. Whether they've been successful or not, I think is doubtful. But I know that some of those discussions are ongoing. We are not asking any of the London market or other reinsurers for a greater share of the brokerage at this stage.
Let me ask you another question. We've been watching with some interest some of the efforts that Sue Langley has been working on in trying yet once again, almost in a Sisyphean kind of task to better standardize the electronic interchanges and things of that nature in the Lloyd's market. And then, of course, we took note of the exchanging news last week. You've been in the marketplace a long time, and you've been associated with an independent broker for a long time. I mean, where do you view things as currently standing in this first quarter of 2011?
Yeah, well, we're very supportive of Sue and of what she's trying to do in Lloyd's. It has to be remembered that Lloyd's is a franchise, and so, whilst Lloyd's want many different things to occur, they need to get the managing agents on side as well as the brokers on side. And the managing agents, many of them are part of enormous companies that have global platforms, and to try to get all of the syndicates and Lloyd's operating off a single platform and the brokers operating off a single platform is definitely one heck of a challenge. Having said that, we have to move away in the London market from the way that we have traditionally done business. Now, I don't think that there is any justification for doing away with the face-to-face broker, because that's what makes the London market the London market. But there's no reason why a broker needs to be showing a piece of paper that gets signed and stamped by an underwriter in the room. That's archaic. The number of times that a broker is involved with the transaction, has to rekey the information for that transaction, is quite farcical. Wherever in the world the business is produced, whichever one of your offices, and then reproduced in London, and then reproduced by the underwriter, and then reproduced again post the quoting, etc. It's archaic and it needs to be changed. There are some moves. We've been piloting the iPad project with Lloyd's, and we're hopeful that can lead on to more of a technology-based solution for the marketplace. Unless the industry collectively is willing to work together rather than working independent to create independent solutions, it will never be resolved. We must do it because of the cost base. The London market is the most expensive market to operate in the world, and it makes no sense.
No, that's true. Let me circle back a little bit to claims. We woke up in the U.S. today to news of yet another major earthquake in Christchurch in New Zealand. This one apparently is going to have a pretty grim death toll as compared to the first one in September. What kind of shakeout is? Many of these are still in the same reinsurance program, I would think, with Suncor and QBE. How will this affect the claims payment through the London market? I'm sure they'll all end up there.
Yeah, I think that's right, and many of them are actually regional programs for Australia as well as New Zealand, and the Australian losses are very significant as well.
Right.
So between Australia and New Zealand, they've really had it very bad over the last 6 months. I think if we look back to Chile and what happened in Chile, Chile was a very sizable loss versus the market down there. It's probably going to end up near the 8-9 billion mark for what is less than a 2 billion marketplace. Mm-hmm. And it had very significant increases in pricing. Overall, it didn't have an effect on the global market, and this won't have an effect on the global market. It will have a short-term effect on the pricing in the region, and I expect that to go up. But just like Chile, I think it's a year next week. We're already seeing pressure on pricing coming down at the first renewal. I fully expect it to be a short-term blip down in Australia and New Zealand. Certainly don't see it having a significant impact on any London market or any reinsurer on a global basis. But of course, those who are already running at pretty poor numbers, and we've seen a couple of results come out over the last couple of days over 100%. It doesn't help, does it? But no. On its own, it's not enough to really push the market.
And you're already seeing renewal rates stabilizing or trying to come down in Chile.
wish I could even say stabilizing, but coming back down again. Again, there's some disappointment when pricing was only moving 10-15% after it's gone up at the immediate renewal post the loss. Now we're at first renewal, and yep, coming back down again. So
that's amazing.
Market doesn't stay hard for long.
That's amazing. One final question. You're a pretty astute observer, and you travel frequently. I've exchanged emails with you when you've been in Africa, actually, now that I think about it. What is going on across the Middle East, all the way from Libya on the west to about 1,500 to 2,000 miles to the east? The whole rim is on fire, and there's a tremendous, I guess, Western infrastructure there with the petroleum industry. Is the market taking note of this? I mean, what do you see is going to unfold, perhaps?
Well, certainly the oil market reacted quite strongly. We saw the price
Yes.
of oil going up quite dramatically.
Yes.
So there is some concern there. There's certainly no reports of major oil refinery losses at this stage, and I think they're quite well protected, quite well guarded. So whether that will end up coming through and becoming a major loss to the industry, I'm somewhat doubtful of. I'm not sure that in this politically sensitive stage that those are really the targets. In terms of real values, something that could come out into the international markets, those would really be the targets, and those would be the things that could cause significant damage. Beyond that, there is little in the way of international reinsurance exposure from the region by comparison to other regions. You have a fairly extensive local insurance market that can take very significant risk due to the lack of any cat exposure or significant cat exposure throughout the region. Not that much ends up coming out. There's also little in the way of major industry outside of infrastructure or some tourism and, of course, the oil business. So it doesn't tend to have a massive international impact, even though it's a region where you'll see massive loss of life, of course, by comparison to the amount of actual physical damage that is created. So I don't see, unless it moves into the oil industry, that it's going to be a very significant impact to the international insurance market.
Well, there are pundits in the United States now who are saying that Cairo has spread to Madison, Wisconsin, because of the strikes going on here with the public employees unions.
Absolutely,
yeah.
What political, but from a different perspective.
What's next for Cooper Gay? Can you give us any hint?
Well, we have quite a task in driving the synergies of the Swett and Crawford business with the Cooper Gay business. We integrated our business extremely quickly and successfully. We lost 2 kids in the entire transaction out of more than 1,500 people. So
wow.
We did pretty well there, and I would say within a matter of weeks we had integrated the businesses. But driving the synergies and getting everybody to work together is the challenge. We just had a very big seminar in Las Vegas, over 300 people, getting the group together, and everybody got on tremendously well and came up with an awful lot of ways of doing business together. So we'll have a lot of concentration on that, building out our reinsurance capabilities in the States to be able to handle the over $2 billion premium that we handle in the E&S arena. We want to be able to get a lot of that into the reinsurance market. But in addition, we're doing some other things. We've just closed out the acquisition of 100% of our Mexican office. We've just opened up a new business in Belgium for our marine business, and we're looking to expand them elsewhere. We're continuing to add people in the London market as we build out our product capability here. We got, again, pretty significant growth in 2010, and we think that there's capabilities, even despite the difficult economy, the difficult marketplace, to get continued organic growth. So for now, just building out specifically what we are, some bolt-on acquisitions where they make sense, some acquisition of individuals as well. Probably not something earth-shattering for a few months whilst we just embed what we've already done.
Well, at least we've been officially told we have a few-month interregnum before your next earth-shattering move. So we'll notify the U.S. Geological Survey with the seismologists. So, all right, Toby, thank you very much for your time today.
Thank you, Frank. My pleasure.
All right.